So welcome to part 4. This is just where I go do some technical analysis. Just remember, this is all futures based analysis. Trends are trends though, they're not going to change, and obviously, you know, the futures markets are priced off of the underlying, so as CFDs I guess to a degree, but they react much more in sync with the underlying, I would say. So with that point, you know, it doesn't matter what you're trading, the trend is the trend, so you still can take some value from these. However, if you're trading CFDs, you're probably just going to have to tweak prices, that's all. And you know, just a reminder, so you know, we've got a lot of inflation data leading up to the FOMC meeting decision this coming week, so you know, expect some big moves, I would say, and of course, you know, it's going to be a question of whether they're going to skip or they're going to do 25 basis points for the Fed, and of course CPI could swing it one way or the other, and then of course you've got ECB, which is pretty much a done deal for a 25 basis point increase. Now, the indices analysis, just going to warn you here, I've moved on now to the September futures contract as June expires this Friday as part of the quad witching. So just a reminder of the legend. So black numbers in the right hand column, they are going to be support and resistance levels based on trend lines. Brown numbers are breakout levels. Claret numbers, these horizontal lines that I put in, are either levels where I see support or resistance, or whether they're on double, triple tops or bottoms. Just a reminder of the pivot point colors and also the fib colors, and there is at least one chart with the fibs this week. As usual, we start with the Dow. So here is the Dow daily. You know, for me, there was a really nice clear head and shoulders, and that was broken when it got around that 34,205 level. And of course, NFP on Friday created big moves in both directions, as you can see there. Up, down, big down, and then recovered pretty much all the way. So as you can see, it got very close to just finishing where it started the week. So I've put some Fibonacci's on some of these charts this week again, because you know they are more in play, and just remember, you know, what was a support line will become a resistance line. What was a resistance line will become a support line. Remember, don't take them off straight away. And I can't emphasize this enough, make sure that when you draw your lines on your charts, if you're doing that, that they are as accurate as possible. You know, just think about it. If you were standing in one spot and you wanted, you know, you had a target of where you was going to be in, say, 10 miles if you was walking. If you was 1 degree out when you started, think how far away from your target you're going to be at the end of 10 miles. It's a lot. And of course, you know, with these lines on these charts, even being out just that fraction can be the difference between you getting stopped out and actually getting your profit. Because, you know, most trades will go against us before they're going to go for us, if they're going to. And it's just a matter of whether we've got our stop losses far enough away, of course with strong risk management, to prevent that stop being triggered before the market turns in our favor, if it's going to turn in our favor. It doesn't always, you know, sometimes we're going to be wrong. But the point I'm making here is that, you know, just that even that one tick or pip can make all the difference between you getting a profit or a loss. So accuracy is paramount with these. You know, I actually use a magnifying glass, just really to just make sure they're pinpoint accurate as much as possible. So anyway, so let's have a look at some levels. So for the daily on the Dow, I've got 33,797 as resistance. I've got 33,036 as support and 32,619 as support. On the 30-minute, I've got 33,652 as resistance, and I've got 33,598 as support and 33,525 as support as well. I've got the pivots on there as I usually do for the 30 minutes, so you know you're going to see a combination of different things on the charts to hopefully help you make some decisions. Of course, just remember, you know, Fibonacci is going to be there until it breaks one way or the other when it creates a new trend, but obviously with the pivots we get fresh pivot levels every day. So S&P, looking at the daily, 45.46 resistance, 44.67 resistance, 43.67 resistance, and then that 43.48, which is F2, so the 50% line on the Fibonacci comes the resistance level for the moment, and support is at 42.38 and also at 41.12 with that upward trend line, but obviously a bit lower. On the 30-minute, resistance 43.62, support is 43.23, but that is a breakout level if it gets through there, followed by support at 42.54 and 42.35. Moving on to Nasdaq, resistance is 15.526 and 15.163. Support is 14.581 and 14.248, which is also a breakout level. Here we're looking at Nasdaq on 30 minutes. 15.167 is resistance. Support is at 15.019, although that is a breakout, and support at 14.672 and 14.591. So again, you know, we are seeing, as you can see clearly on here, there are some heads and shoulders on the stocks. So you know, this is where you get two sort of lower areas in the market where there's been rejected with a much higher one in the center, and obviously you can see that from that nice and clearly. And sometimes, you know, that sort of neckline, that line going through all the way across the chart there, that's very horizontal, but sometimes they can be angled as well, so you know, don't get fooled by that. It's just a matter of being able to draw that line on, but that is almost a textbook head and shoulders that you can see there. So I've got resistance at 18.34 and 17.96 with support at 17.39. On the 30-minute, resistance 17.68, support at 17.57, but that is a breakout, and also 17.20. And you know, these charts, you know, you see these levels again. You know, you can take screenshots or you can take just photos on your phone just as reminders for these. Okay, as usual, looking at a couple of currencies. So I'm looking at pound against the dollar, cable. So here again, sort of a fairly volatile week, tweaking around a bit. It's amazing to think that not so long ago, but in the summer, the pound to the dollar was 131, and here it was trading 121. So resistance I've got at 125.95, 124.95, and 123.03. I've got support at 120.40, 119.14, and then way below at 116.56, which would be again another breakout on the downside should it get there. But obviously that would take a lot of dollar strength for that to happen, or some really bad news to come out from the UK. Moving on to the 30-minute, I've got resistance at 122.79, 122.71, with support at 122.37, 122.35, but that one is a breakout one, and 121.10. So a breakout, just in case you're new to these, so it's a support line or a resistance line. In this case, it's a support line, but if it breaks it, then you know that support line then sort of it's going to, as long as the candle closes below that. Remember, this is the 30-minute chart. If it breaks it and closes below that, then it becomes a resistance line. Of course, sometimes they're false breakouts. You know, nothing in trading is perfect, although we try and strive to get it there as close to that as possible. So you know, so when it goes through there, if I was buying at that support and it went through, I would definitely get out of that position. If it broke that and I didn't have a position, I would be tempted to sell, but of course you've got to make those minds up for yourself. So the euro against the USD, I've got resistance at 107.75 and at 106.54, which is F1, so that's the first Fibonacci level. So that becomes the resistance level of 382 there. Support wise, I've got 105.30, I've got 104.80, and then the fibs come back into play for support: 104.51, 102.48, and if it gets through all of that, then at 101.89, that would be a breakout level. You know, I'm not really expecting the dollar strength or the euro weakness to sort of hit those levels at the moment, but you know, the data sort of, it just shows you how strong that the US economy is in comparison to pretty much anyone else. Funny enough though, India has a very strong economy, so perhaps if you're not sort of looking at India, you should start to. Okay, so resistance wise, let's have a look at the 30-minute, and resistance is 106.34, support is 106.07, although that again is another one of those breakout levels should it get through there. Then 105.33 is the next support, followed by 104.80. So Bitcoin, Bitcoin's been a little bit under the radar, but it's been creeping up there, hasn't it? And you know, although we've always considered crypto to be the most volatile of contracts, of which, you know, when you look at some of those candles and moves, you can say yes, it was, but more emphasis on was. It doesn't seem to be that way. It's, you know, it's reacting much more to what's going on in the global economy these days. So for Bitcoin, I've got resistance at 30,285 and 28,908, with support at 27,255, 26,875 and 23,980. So you know, it's coming into that sort of flag, pennant, wedge, whatever you want to call it. It's, you know, it can stay in there for another week or so, another 2 weeks, but it's getting ready for another break one way or the other, I would guess. On the 30-minute, I've got resistance at 28,239. I've got support at 27,990, but that is a breakout level, and followed by 27,290. Okay, so here's sort of the fun chart. This is the Bitcoin against Nasdaq, and you can just see how they sort of diverge and converge, and just look at them now. You know how close they got. They're crossed. They're touching. They're almost touching. Are they going to cross? And then they just start to move away from each other again a little bit. But you know, it's been another steady performance from Bitcoin for sure. Okay, let's move on to gold. Gold has become sort of digital Bitcoin, I suppose, to a degree when you look at the moves it's having. You know, I'm not saying they're crazy moves, some of them are justified, but you know, just look at sort of how much gold is moving. So level wise, resistance, I've got 1953, I've got 1885 as well, but that is a breakout should it get above that. I've got support at 1822 and also 1797. And there, you know, you can just see the volatility that there is in gold. I mean, look at that big move, $25 on the day. So on the 30-minute, I've got resistance 1848, support at 1842, but that is a breakout level, and it could go through that pretty much on the opening, followed by 1822 as support. Last but definitely not least, oil. Again, you know, just look how high that was just over a week ago, up at 95, and then here we are trading down to 81. You know, that will be a pleasant surprise for the central banks, because otherwise, you know, that was going to become inflationary if it stayed up there. Of course, you know, where does it head next? Does it have another bounce back up? Or do we come down and test some of those extra support levels? So yeah, a big down week for oil, over $10. So I've got resistance at 90.21. I've also got resistance at 84.53, which is the first Fibonacci number. You know, support becomes resistance again. And then I've got support at 81.52, followed by a couple of fib levels. So 81.28 is F2, which is 50%, and 78.02, which is the golden ratio, which is F3. And below that, 77.31, which is a breakout level, should it get that low. Again, if it gets that low, will it prompt OPEC Plus to cut supply yet again? So finally, the 30-minute chart for WTI, I've got resistance at 87.80, 85.98 and 84.76, with support at 81.62. You know, if you guys actually ever want to email me and message me and tell me how well these levels work for you during the weeks, I would appreciate it. You know, hopefully they do help you. Everything that we do is about helping you guys, you know, helping you to make better trading decisions, to analyze the markets more efficiently, and help take away some of that time element, because we do a lot of the work for you here. And then of course, on top of all that, we've got a whole mass of different services and courses to help you either get into trading or to improve your trading. So, you know, just check out all our website, check out all our offerings, and see if any of it's for you. Hopefully it is, and we can continue to help you in the future. Again, just finally, a little reminder of what we do. So apart from the YouTubes, daily newsletters that go straight to your inbox each morning, to provide you with global headlines, global news, and also my views. And then if you'd like to subscribe, we also provide chart levels and pivot points. When it comes to courses, we offer everything from one-day workshops, one-week courses. One of those includes a free trading challenge, up to the comprehensive masterclass, which is an accredited course, and the next one of that starts in a week's time on the 19th of June. So if you're interested, then contact us quickly, because those places won't be around for long. Now, also trader mentoring, where we help traders improve and get to that next level time and again. We consult to companies, FX and commodity exposure. We provide a whole platform and mass of educational content to individuals, exchanges and brokers. And